Right now, the world owes $111 trillion in government debt alone. That number has never existed before in human history. Not even close. 25 years ago, in the year 2000, global government debt was approximately $20 trillion. In just 25 years, it has increased by over 450%. If you divided that $111 trillion equally among every single person on the planet, every man, woman, and child would owe approximately $1,397.50 each, including newborn babies, including people living in extreme poverty, including people who have never borrowed a single dollar in their entire life. But here is the question that nobody is asking. Who actually pays for all of that debt? And what does it mean for the financial future of every ordinary person alive today? Today we are going to answer those questions with precise and devastating data. In 1913, total U.S. government debt was approximately $2.9 billion. By 1950, after 2 world wars, it had grown to approximately $257 billion. By 2000, it had grown to approximately $5.6 trillion. By 2020, after COVID, it had grown to approximately $27 trillion. By 2026, it has grown to approximately $36 trillion in the United States alone. The United States is now adding approximately $1 trillion to its national debt every 100 days. That is approximately $10 billion every single day. Approximately $417 million every single hour, approximately $6.9 million every single minute. The interest payments alone on the United States national debt now exceed $1 trillion annually, making interest payments the single largest expenditure in the entire federal budget, bigger than defense spending, bigger than Social Security, bigger than health care. The United States now spends more money paying interest on its debt than it spends on anything else. And the United States is not alone. Global government debt has exploded from approximately $20 trillion in 2000 to over $111 trillion in 2026. Japan's national debt is approximately 260% of its entire annual GDP, making it the most indebted developed nation on the planet. The United Kingdom's national debt has surpassed 100% of its GDP for the first time since the 1960s. France's national debt stands at approximately 112% of GDP. Italy's national debt stands at approximately 140% of GDP. Global corporate debt has reached approximately $87 trillion. Global household debt has reached approximately $59 trillion. When you add all forms of debt together, the total global debt burden now exceeds approximately $307 trillion. That is approximately 330% of the entire global GDP, meaning the world owes 3 times more money than it produces in an entire year. So why do governments keep borrowing more money? The answer is mathematical. When a government borrows money, it has to pay interest on that debt. To pay that interest, it needs its economy to keep growing. To keep its economy growing, it needs to keep spending money. To keep spending money, it needs to keep borrowing more. This creates a cycle of debt that is mathematically impossible to escape without either massive economic growth or significant inflation. And here is the critical connection to your personal financial life. Governments need inflation to manage their debt, because inflation makes the real value of their existing debt smaller over time. A government that owes $36 trillion today will find that debt much easier to manage in 20 years if inflation has been running at 4 to 5% annually, because the economy will be nominally larger even if ordinary people's purchasing power has been quietly destroyed in the process. This is why inflation is not an accident. It is a deliberate and mathematically necessary feature of a debt-driven economic system, and ordinary people pay the price every single day through rising costs and declining purchasing power. History gives us very clear data about what happens when government debt reaches unsustainable levels. In 1923, Germany's Weimar Republic had borrowed so much money that it could no longer manage its debt. It began printing money at an extraordinary rate. By November 1923, inflation had reached 29,500% per month. A loaf of bread that cost 250 marks in January 1923 cost 200 billion marks by November 1923. The life savings of millions of ordinary German families were completely wiped out in less than a year. In 2001, Argentina defaulted on approximately $132 billion of government debt. The Argentine peso lost approximately 75% of its value almost overnight. In 2010, Greece's debt crisis required an international bailout of approximately 110 billion euros. Greek GDP fell by approximately 25% over the following 5 years. Unemployment reached approximately 27%. Ordinary Greek families saw their incomes fall by an average of approximately 40%. These are not ancient historical events. They are recent documented examples of exactly what happens when government debt reaches a level that can no longer be sustainably managed. And right now, global government debt is at a level that has never existed before in human history. The current Iran war of 2026 is making this debt situation significantly worse in real time. The United States government is spending over $1 billion every single day on Operation Epic Fury, and has requested an additional $200 billion in military funding. If approved, the federal government will have spent $1.2 trillion on defense in fiscal year 2026 alone. Every single dollar of that military spending is being added directly to the national debt. The IMF has already downgraded its global growth forecast for 2026 from 3.3 to 3.1%. In the worst-case scenario, global growth could fall to 5%. Goldman Sachs projects inflation staying elevated between 3 and 5% annually through 2028. Lower economic growth combined with higher inflation and rapidly rising debt is the exact combination of conditions that has preceded every major debt crisis in modern economic history. And it is happening right now in 2026 at a scale the world has never seen before. Here is the direct and personal impact of the global debt crisis on every ordinary person's financial life. Inflation will remain elevated for years because governments need it to manage their debt. Interest rates will remain volatile, creating uncertainty for anyone with a mortgage or loan. Tax revenues will need to increase to help service government debt, meaning ordinary people will pay more taxes over time. Government services will face increasing pressure as more of the budget is consumed by debt interest payments. The purchasing power of cash savings will continue declining as inflation remains elevated, and the gap between the wealthy who own inflation-protected assets and ordinary people who keep their money in savings accounts will continue growing wider every single year. So what can any ordinary person do right now? Do not keep excess cash in a savings account during a period of elevated debt-driven inflation. Invest consistently in broad market index funds that track the S&P 500. Allocate 5 to 10% of your portfolio to gold, which has historically been the most reliable store of value during periods of government debt crisis and currency devaluation. Gold rose from $300 an ounce in 2002 to over $4,300 in 2026, a gain of over 1,300% in just 24 years. Consider silver as an additional inflation hedge. Silver has hit almost $70 in 2026. Diversify your investments across multiple countries and asset classes to reduce exposure to any single country's debt crisis. Build multiple income streams to reduce dependence on a single employer during a period of economic uncertainty. Here is the single most important number in this entire video: $111 trillion. That is how much the world's governments owe right now. It has never been this high before, not even close. And it is growing by billions of dollars every single day. The people who understand what this means for their personal financial future and position themselves accordingly right now will be on the right side of the biggest wealth transfer this number is going to create. The people who do not understand it will continue to wonder why their savings keep losing value, why their cost of living keeps rising. and why no matter how hard they work, they can never seem to get ahead. The data has already told us everything we need to know. The only question is whether you are going to use it.